power of capital. How is the investment capital that we're investing into these markets actually funding businesses, funding people, creating jobs, delivering impact? I'm a value investor. I was taught the value of contrarian investor. I'm also an optimist. And I tend to find that value investing, as I said before, is a successful investment strategy. So when I think of the future of finance, it's, how does technology reshape currency, the rise of crypto, big data, machine learning, and this notion of big data in the space that we live today. We can do so much better to characterize overall health and wellness, not just of individuals, but of countries and companies as well. So I'd say just be passionate, find your passion, find what makes you kind of stand out from others. Think of that as your exception, and that's what makes you exceptional.
This episode is brought to you by Impacts Asset Management and the Intentional Endowments Network's Endowment Impact Benchmark. This is the Future of Finance. Hi everyone, welcome to the Future of Finance. I'm Georges Dyer, and today we are talking about impact in emerging markets. Capital is a force that shapes economies, fuels innovation, and drives global progress. Today, some of the most dynamic investment opportunities are unfolding in emerging markets where rapid growth, shifting demographics, and technological advancements are creating new frontiers for investors. There are also great opportunities to advance sustainable economies in these markets and to leapfrog technologies that we now know are unsustainable. The challenge is understanding how to navigate these markets effectively while aligning profit with purpose. In today's episode, I sit down with Asha Mehta, founder and CIO of Global Delta Capital, and author of The Power of Capital. Asha is a pioneer in frontier and emerging market investing with deep expertise in how data, sustainability, and financial flows intersect. She's been at the forefront of using capital to drive impact while generating strong returns. In this conversation, Asha shares some key insights from her book, stories and lessons from her career, and how investors can tap into the massive potential of global markets while making a real difference. So I hope you enjoy it, and let us know what you think by leaving a comment or review, and we'll dive in. Asha, welcome to the podcast. How are you?
I'm doing great. Thank you so much for having me. I'm delighted to be here and honored.
Yeah, thanks for being here. Where do we find you today? Are you in the Boston area, or are you traveling the world?
I'm nearby. I'm in Boston, Massachusetts, just a few miles away from you, right?
Yeah, enjoying the cold. It is crisp and cold up here in Gloucester, but it's nice. It's winter, so it feels appropriate.
Right. January, New England.
Yes. Well, again, such a pleasure to have you on. And first and foremost, congratulations on your book, The Power of Capital. I just read it last month and was so impressed. And I'm not just saying that because you're on the podcast, but I really enjoyed it. I've got it right here. And yeah, I think, I love, first of all, the subtitle, An Adventure Capitalist Journey to a Sustainable Future. But I feel like I've read a lot of sustainable investing books halfway through and felt like, okay, I kind of get it. And it gets a little dry, but yours was just full of such great stories. And I loved how you sort of put that in the context of what was happening in the countries that you traveled to and the impact that the investments you're making had, and just weaving your family travels in there. It was great. It was a page turner. So nice work. Congrats.
Wow, I'm flattered. Thank you so much. Thanks for profiling the book. Thanks for reading the book. And thanks for the nice comments. Yeah, it was inspired not just by the work that I've done in my career in emerging markets and in sustainability and just wanting to document some of the incredible stories I've seen. But I don't know if you or your listeners would remember the works of Jim Rogers from about 20 years ago. I think of him as the original adventure capitalist. And he took great stories from the ground around incredible changes that are happening in the emerging markets. This one just takes more of a lens on sustainability specifically.
Yeah, well, I thought that was a great piece because obviously that's what our focus is. And I think, that story around the importance of investing in emerging markets for the economic development that drives has been around for a long time and obviously critically important and very powerful in and of itself. But putting that sustainable development lens on all of it, I think is, obviously absolutely crucial right now as we think about the impact of the growth in some of these areas. So yeah, just tell us a little bit about your work. I think in the book you said you originally were interested in medicine, being a doctor, and then at some point had an epiphany around the power of capital and, the impact that investing could have. So just, kind of give us a walkthrough of how you got here.
Yeah, thanks. Happy to. And that's right. That's the intro chapter. Right away, we make that transition from my early years in college. I was a double major in biology and anthropology, daughter of two physicians, both from refugee families, and really encouraged me to pursue a career in medicine for
Mhm.
the stability that it provides.
Yeah.
Um, I was just so taken by their own histories, their own stories, traumas. My father comes from India. He was technically born in Pakistan, what is now known as Pakistan, so pre-partition India. And my mother's family is Eastern European. And so, yeah, I had a moment in junior year of college. I went to India. I wanted to serve the poorest of the poor, not understanding how poor that could actually be. And so I found myself, on a vaccine distribution project in Lucknow, India, one of the poorest cities within the country. And when I got there, speaking of money, the funding for the project fell through. And so this was, before the days of cell phones or even the internet where you could just figure out on the fly, like, what am I going to do instead? How can I find an
Right.
internship? I was on the ground looking around, even pre cell phones. So I couldn't even call home and say, I need to get back now, or couldn't do
Mhm.
it that easily. And when I looked around, I saw the level of poverty around me, people with tethered shirts, maybe no shoes at all, maybe didn't have access to clean sanitation. And it hit me that what these people needed more than health was wealth. And that was kind of that epiphany on, what investment capital could do. My view was they needed money, they needed jobs, they needed really what we call capital and liquidity today. uh, I was daughter of 2 doctors, didn't know anything about finance, but decided I wanted to spend my summer working on it, so I went to a phone book and I looked up bank, and I found the Bankers Institute of Rural Development turned out to be a microfinance institution. Microfinance was just coming of age at that time. It was the late 1990s, right around
Mhm.
the time Mohammed Yunus won the Nobel Prize for his work in microfinance. Um,
Right.
so I found, this little organization. It was run by a mom and pop, literally, and because I knew how to type, they let me, have an internship with them. It was an unpaid internship, and it was fascinating. I my job was to log their loans, so I remember logging $10 for a sewing machine or $20 for a cow. I still have the
Mhm.
records, in fact, the loans
Cool.
then. And, that was my job, really, to create a database. But what was phenomenal about that experience was going actually into the village and going to these borrowing groups, entirely women, and seeing, the looks on their faces, and hearing, I don't speak Hindi, so just kinda hearing them, just taking it in viscerally, hearing them talk about what it means to borrow money and what money does for them in their societies. I'm hearing it entirely viscerally, but it was fascinating to me that as we would give out very small change, I could see that these women were building financial independence, they were supporting their families, they were building local economies, and I was hooked. I decided right then and there I was gonna spend the rest of my career in finance. So I've been a banker and I've been on the buy side of institutional asset management for about 20 years since, again, focusing my whole career on emerging markets investing and taking a lens specifically on this theme around power of capital. How is the investment capital that we're investing into these markets actually funding businesses, funding people, creating jobs, delivering impact?
Yeah, fantastic. I just a quick aside on the microfinance piece. I want to get to sort of your more recent career, but what are your thoughts on that and sort of how it's evolved over the years? And did you have any thoughts of kind of going deeper on the microfinance side, or did you kind of see just the greater scale on sort of the institutional investing side?
Yeah, microfinance has had a really interesting transition. And one thing that's interesting to me, I'm sure, I know we have a wide network in common. Probably come across many people as I have who have actually began their careers in microfinance as well. I think I said it before, many consider it to be the original impact investment. Microfinance, it's had a lot of pressure as a sector. had some very adverse outcomes, specifically in India, actually. But the reality is it's become mainstream. It's a mainstream sector in the emerging markets. In fact, Grameen America invests here in the US and offers microloans here.
Hmm.
For better, for worse, it's the foundation of investment capital. I decided to go for the big leagues. I decided to go to institutional. I went to Goldman right after that experience and really haven't looked back. But I think of that foundational experience as really, again, setting that vision around what investment capital can do. We think about it here at the institutional level, alphas and returns and risk management. Having had that background on how is this impacting the people who will receive those dollars in the very end, it adds a different level of meaning.
Yeah, talk a little bit more about that. I mean, I think the opportunity is obviously huge. I think you cite some stats in the book that is it 75% of people and 80% of the land mass or something along those lines are in emerging and frontier markets. So it's a huge part of our world.
Yeah, I mean, the thesis of the book is, really around this notion that investment capital has a dual function. That one, we think of it again in the context of our investment worlds around delivering returns for investors. But the other purpose of it, of course, is to build ecosystems. That when you finance something, you're building out infrastructure. That's kind of the subtext of the book, the power of capital, the journey to a sustainable future. But to your
Mhm.
points early on, it's really a story of emerging markets. So I take readers on a walk around the globe, start in China, go to India, Vietnam, Saudi, and tell stories from the ground. And what motivated me to write the book in part was just recognizing the fear, the mystery, the lack of awareness that many people have around the relevance of emerging markets in our day to day. As you say, the emerging markets represent the bulk of the globe's footprint, the bulk of the globe's population, in many contexts, the bulk of the globe's productivity. Two of the three largest markets in the world today are emerging market economies. The scale is vast and the
Mhm.
breadth. We think of many of these countries as poorer countries where themes around impact, access to sanitation, like I said before, access to food, these are real world issues. And the other side of the spectrum is true as well. The emerging markets are also leaders in innovation, leaders in climate technology, leaders in solar technology. Many, the adage that necessity is the mother of invention. Many incredible inventions, not just on the climate side, but I think again one of the most well known examples of how private capital and innovation from emerging markets has reshaped the world is in the context of mobile money. Mobile
Mhm.
money was actually born out of Nairobi, Kenya, with M-Pesa. Again, goes back a couple of decades. Of course, that's mainstream today that we use our cell phones to pay bills, but that's been happening. In fact, was embedded out of emerging markets. So much of the book is about just telling these incredible stories about the ingenuity, the creativity, and the opportunity that's in emerging market.
Yeah, I want to come back to that kind of idea of leapfrogging in some of these areas. But first, let's just baseline for some of our listeners who might not be as familiar with the terminology. Yeah, just define emerging markets and sort of the differentiation between frontier markets in particular.
So I think of emerging markets as a set of countries that are heterogeneous, extremely heterogeneous in nature, as we just talked. And I actually think of the separation of developed and emerging markets as, a relic of the past. And that, as I said before, there's so much wealth and innovation that's coming out of these emerging market economies. But from an investment perspective, the reality is asset allocations exist and benchmarks exist and developed markets
Right.
are squarely defined separately from emerging markets. I think
Mhm.
many of the distinctions, quite honestly, are more art than science. Between emerging markets and frontier markets, I really see it as a spectrum, with the more liquid markets being considered emerging markets and the less liquid markets being considered frontier markets. And again, there's benchmarks to define. So an SCI runs a developed markets benchmark, emerging markets, and frontier, and countries flip flop back and forth between EM and frontier, which speaks to the spectrum point.
Yeah, I was going to ask you about that because I thought it was interesting in the book and just the sort of impact that change in categorization can have on a country when they get classified as emerging from frontier. Talk a little bit about that and how big a kind of piece of your investment strategy are those classifications.
Yeah, it's so interesting to me. Again, it speaks to this theme around power of capital. I first came across this because I was intrigued by frontier markets. There wasn't a lot of investment in frontier markets. Like I say, by definition, it's a lower liquidity asset class. So I just happened to fall into an opportunity where I was running a frontier markets investment fund. And right when I started managing the fund, I talk about the story of Colombia in the book. Colombia was upgraded from a frontier market to an emerging markets country. The stock market popped, and I thought, wow, well, there's an interesting theme here. That was the first official upgrade from frontier to EM. Frontier is a relatively newly defined asset class. So the rest of the emerging market countries that had been there before were sort of grandfathered in. But as I started uncovering this idea that countries benefit from the upgrade from frontier to EM, I found myself asking why, right? With credit ratings, for example, it's very important for a country to have a stronger credit rating because the cost of capital associated with it. I should say, there is a cost of capital associated with it. Like I said, EM and frontier is more of a spectrum, and so there's no direct impact in terms of the cost of capital. So I found it really interesting to me that, when countries were on the brink of an upgrade, you would send a delegation from the local economies to private sector investors to lobby for the upgrade. So, yeah, I talk in the book around Peru, Pakistan, some interesting examples of regulators, ministers of finance, ministers of economy who would come and sit with me and make their case and ask me to lobby with the indices to support their upgrades. And again, I was wondering why. Like, there's no cost to capital benefit associated with it. Is it reputational? I think it is reputational. Also about liquidity, So what I was saying about sitting, or just looking around in Lucknow, India, and thinking these businesses need liquidity, they need access to capital. That's what I was experiencing when I was talking to regulators across these countries, and the impact is real. So I tell stories in the book around the Gulf. The Gulf markets have many of them have been upgraded from frontier to EM over the last decade. And the impact has been profound. And the first example was UAE and Qatar. They were both upgraded at the same time. From the time that the announcement was made to the time that it was implemented, UAE incurred a 99% investment return. So if you were long
Wow.
UAE ETF, you doubled your money that year. So it really speaks to the fact that there is a flow of capital associated with that shift in profile and the relevance of reputation, the relevance of benchmarking, and the relevance of capital.
Yeah. And does that happen? Are there like technical triggers that are set off when that happens where like more capital just comes in automatically? Or is it investors say, okay, with this new classification, I just feel more comfortable getting into these markets and then the capital comes that way or both?
Yeah, it's very much both. So there's passive money and active money, and when a country is moving, passive money has to go because it has to follow the benchmark. So if a country frontier to EM, it now represents 1, 2, 3% of emerging markets. Passive investors in emerging markets have to increase their allocation to that country. And so there will be a flow of capital into that country. So that is absolutely real. It's
Automatic.
programmatic.
Yes.
Exactly. And then what's interesting to me is how profound these effects are. For every $1 of passive money that moves in, $5 of active money moves in.
Yeah.
So that's investors trying
It
to
just
capture that risk.
Yeah, it just builds on itself.
Yeah.
Interesting. Cool. I want to come back to the leapfrogging concept and idea. And you mentioned, kind of mobile banking and telecom, or large parts of Africa sort of skipped building the infrastructure of landlines and went right to cell phone technology. There's often lots of talk about similar dynamics in energy in the hope that some of these markets can kind of skip building out a lot of fossil fuel energy infrastructure and go right to renewables. Yeah, do you see that happening? And, how do you see investors helping to make that happen right now?
Yeah, it's happening in real time. It's amazing. Like I said, mobile money, started in Africa. I think it got widespread in Asia. And my experience, the West, the U.S. was the last to adopt.
Yeah, it's catching up. Yeah.
Yeah. So the effect is real. I think cell phones are, again, that case example. And when I think about how do we define the age that we live in, the digital age, the technology age, that leapfrogging effect is only more compounded. The bulk of the world's youth, in fact, lives in emerging markets, and they are by far the greatest users of technology. And so you think about this vast population of young people who are increasingly very educated, who have access to technology and access to more capital. They're carrying around cell phones in their pocket now, and cell phones today have the power of a supercomputer. They're effectively carrying that around in their pockets, and I see it in real time. The strength of digital revenue, for example, in emerging markets is multiples higher than what it is in developed markets. And so the adoption of technology has just been vast. Again, you can see it in numbers, you can see it in financials, you can see it just by walking around. Biometrics, for example, even in the villages in India, it's become mainstream. I still don't have biometrics for my bank account here in the US. India has adopted a process around demonetization. I think that's fascinating. They've taken bills out of the economy. It's a way to stamp out corruption. If we don't have cash, it's much easier to follow the cash flows to receive your tax revenue and keep tr- keep track of the usage of cash within a given country. So those are, some of those examples of leapfrogging effects, and I think they even speak to innovation.
This episode is made possible by Impacts Asset Management. Founded in 1998, Impacts is a specialist asset manager investing in the opportunities arising from the transition to a more sustainable global economy. Impacts offers a well-rounded suite of investment solutions spanning multiple asset classes, including equities, fixed income, and private markets, seeking strong, risk-adjusted returns over the medium to long term. For more information, visit impactsam.com. That's IMPAXAM.com. This episode of the Future of Finance podcast is brought to you by the Intentional Endowments Network and our new Endowment Impact Benchmark, which is an exciting new initiative helping endowments and foundations measure their progress on sustainable investing. Participants receive expert feedback, the ability to benchmark against peers, and earn recognition for their leadership. If you're at an endowment or foundation that is ready to advance its sustainable investing strategy, or if you want to benchmark your progress against the field, or if you're looking for a credible way to show your stakeholders that you're taking these issues seriously, learn more and join the 2025 cohort at endowmentimpactbenchmark.org.
Yeah, I think, the innovation piece is exciting. And on the energy side, I mean, it's such a critical time for climate right now. And there's a need for a lot of these countries to grow to meet basic needs so folks can have electricity to read at night and do all the things that need to happen. At the same time, as we said, there's so many people that need that if they follow the same track. That's a fossil fuel, carbon heavy kind of track that the West has followed. That's going to be a disaster for the climate, but it has to happen some way. So what's your sort of take on the ability to do that in a clean way? And do you see the possibility for a similar dynamic where these markets can lead the way?
Such an interesting question. Again, I think emerging markets, first and foremost, are defined by their heterogeneity. It's hard to talk about these markets broadly at once. And even within a given country, it's heterogeneous. So I think of China, for example, which is not exactly the favored country among emerging markets, at least here in the US at the moment. China's one of the most complicated markets to talk about because it's also mixed. So China is arguably the leader in renewable technologies globally today.
And EVs and a lot of things.
And it's incredible. I mean, again, just palpably on the ground, if you're walking the streets of Shanghai versus walking the streets of New York, you can hear the silence on the streets because of the vast adoption of EVs. So the reality of the clean technology, innovation and economy in China, it can't be understated. This has been a deliberate investment theme by the government, which, the president of China has declared a lifetime term. So he's got a very long pathway and deliberate pathway he can build to build an economy that's aligned with his vision. So that is very much true. At the same time, China remains the largest coal producer in the world today as well. So,
Right.
those oxymorons exist. But again, that notion around necessity is the mother of invention. You mentioned Africa and the opportunity for renewables there. One of my favorite examples of innovation and the power of capital and funding this type of innovation is from Kenya again, where they took access to energy from 50% of the population having access to about 90% in about 5 years through the production of a geothermal plant. And with a geothermal plant, they have energy that's available 24/7. It won't run out for millions of years. It gives them energy security. And that made possible through multilateral grants and followed by private sector investors who participated in an IPO, a secondary equity issuance, corporate debt issuance. That's where they got the money to power up Kenya. Kind of
Yeah.
example.
Fascinating. I'm curious about that too, and I don't know how much this plays into your work, but this idea of blended finance that I think you sort of just described there, where you know, um, kind of public money or government money will come in and try to de-risk situations for private investors to follow on. How big a factor is that in the investing that you do in these markets?
I think the potential is vast, and that's what's
Hmm.
so exciting about blended finance. That if you bring the scale and the focus that the multilaterals have with the expediency and the tools that exist in the private sector, the opportunity for achievement, for example, of the SDGs is vast. I just spent the morning on this topic, in fact, and we were talking about the SDGs and the funding gap to achieve them. Currently, it's on the order. Oh, I don't. It's on the order of double what it was when the SDGs were originally defined at the beginning
Hmm.
of the decade. So that gap has widened in the last 5 years, and that's where blended finance could be such a significant advancement in bringing in de-risking, as you say, on the public capital side, and creating markets for private capital to crowd in. The opportunity is vast. In reality, I've seen some flow, but these are early days, and I think there's more room for innovation and partnership. Uh,
Hmm.
like I say, I run an emerging market sustainability strategy, and I think this is an area that's very promising and excited to see it develop. But I'd say it's in the early stages of its development.
Yeah, gotcha. And hopefully most of our listeners know what the SDGs are, but for those who don't, the Sustainable Development Goals, which are a set of goals around reducing poverty, reducing hunger, driving clean energy, a whole set of sort of social and environmental benefits that we need to see across the globe. I'm curious too. I mean, I think a lot of this comes back to governance, and you talk about that quite a lot in your book. At governments at the national level, in the case of the investing you're doing, I think in the framing of ESG, the G often refers to corporate governance, and I'm sure that's the case in your investing too. But it's really fascinating to just see the role that good governance plays in terms of the rule of law,
Yeah.
corruption you mentioned, all those types of factors. And just fascinating, I think, how much more of a role that plays when you're going to these countries and deciding whether to invest. Talk a little bit about that and how that sort of dynamic differs or is similar to developed market investing.
Yeah, no, I'd say it's incredibly material. And,
Hmm.
when ESG was coined, the G was well known, right? The G
Right.
had decades of research behind it. ESG was coined just coming out of a couple of major governance scandals here in the US. And in fact, you probably know this all too well. The G was put at the end of ESG to give the E and the S some heft, right? Because the G had
Hmm.
already had so much support behind it. So you're right. I do talk about governance a good bit in the book. I talk about social and environmental focus as well, but it all comes down to governance. It all comes down to what is the implementation of this, as you say, at both, the security level as well as in a macro context. I think for the most part, governance risks in emerging markets are probably overstated. That the reality is, like I said, there's been innovation that's occurred in these economies. There's been incredible economic liberalization, power of capital. It's brought capital flow into these markets. And with capital flow has come not only access to technology, but also access to knowledge around what is a good governance system. And so the standards of governance, I think, have also leapfrogged, for example, for the past decade or 2 decades substantially. These markets, of course, still do score more poorly than developed markets do on corruption ratings, for example. So I don't mean to be entirely rosy-eyed, but I'll just say, generally, I think the governance risks tend to be overstated. I do talk in the book around, there are times when, despite the growth opportunities and the compelling nature of the entrepreneurs within these economies, there are times when the governance risk can be too much to stomach. So this is perhaps the point on the blended finance and why sometimes a public partnership can be very valuable. It's somewhat of a vivid image, but I noticed that you caught it. The notion around, should we buy when there's blood in the streets?
Right.
And
Yeah.
it's a common refrain for contrarian investors. Contrarian investors tend to be, quite successful in that you identify when at a market or when a security is distressed, and you say, "Hey, this is likely to be a short-term theme, or it's likely to be, um, you know, um, overstated in terms of its impact, so the stock price just sold down. This is the right time to buy in, and there's value to be made here." And I think across the emerging markets, that's probably true. It's certainly true at the asset class level right now. But there are times when there's truly the blood in the streets. There are times when the governance systems are so poor and the ability to actually conduct business and achieve returns is simply not reasonable. So I do talk in the book. Most of the book was a positive view on emerging markets, but I acknowledge times and certain markets that make it just much more challenging to justify.
Yeah, I was going to ask about that, and like how do you judge whether this is like a short-term passing thing and a great opportunity to buy versus this is like just more structural and this is sort of an uninvestable market, at least for right now or for the sort of medium term? Is that just understanding the politics and the dynamics, or is it more art than science? How do you make those calls?
I'm a value investor. I was taught the value of contrarian investor. I'm also an optimist. And I tend to find that value investing, as I said before, is a successful investment strategy. So, as it relates to political risk, economic risk, my experience, except in the case of China, which is, again, a unique market, uh, that political risks tend to be overstated. It tends to, and this is even true in the developed markets as well, that what's happening in the headlines is often not directly connected to what's happening down in the economies or at the private sector level. And so I
Mhm.
think of much of what's happening in the headlines as noise, and again causes those value opportunities. When can one no longer invest? I'm a CFA. First and foremost, our objective is preservation of capital. When foreign capital is no longer respected in a country, one has to draw the line. So if companies are getting nationalized or capital controls are introduced, or if there are restrictions in the equity capital markets, those to me are signs that if you don't have the confidence you can preserve your market, it's important to exit. So that's
Yeah.
where I draw the line.
Got it. Nice. Well, let's bring it back to the positive and maybe kind of as we move towards wrapping up. Is there a story or two that really is just a kind of specific success story, whether it's a company or a country, that you saw both the financial returns and the really positive impact for society?
I'll tell a couple, and I'll try to be brief. I already mentioned my experiences in India, uh,
Mhm.
and being on the ground, microfinance, and I'll just acknowledge that in the 25 years since then, since that unpaid internship, talked about microfinance before. Microfinance has become a mainstream sector. It's been adopted across banks broadly. Um, the portion of the population within India that's become banked and in just the last 10 years, in fact, has transformed. It used to be one third of the population had access to financial accounts. Now it's three quarters. And the access to capital across genders, the gender gap in terms of access to capital has completely closed. Literacy rates among the youth are soaring. The country has become electrified. Literally, every town in India today has access to energy. I think of this as just so profound.
Yeah.
Whether one wants to invest in India today, that's kind of a tactical call. But looking back, that story, I think, is truly a story of transformation. It's not a generational story. It's an absolutely transformational story. And I link it to, again, this theory around the power of capital and specifically economic liberalization. So around the time that I was there in the late 1990s, not only was microfinance born, but that was when India adopted this policy of economic liberalization, which again allowed them to bring in foreign capital. And with that, knowledge around better governance systems, technology, and this platform for growth. So that's what I just wanted to highlight because I think it's so profound. And I see opportunities like that across the globe today. One other one that I think is kind of unique and interesting and speaks to where I really got this vision around using the public markets to drive impact. I think that's somewhat novel. I often hear about impact strategies in the context of private markets.
Right.
I was on the ground in Romania meeting with the IMF. And I was fascinated when I arrived. I don't know if you've been to Romania, former communist country. I characterize the country in the book as making a transition from hard communism to hard capitalism. And it's, part of that transition, you still see the culture of, individuals within the country who are scared to speak. It was a culture that was quite fearful in nature. And so when I was on the ground in Romania, I was accustomed to people being a little bit harder to access, a little harder to get them to open up. But when I met the IMF, the head of the IMF, Guillermo Tolosa, he greeted me with a hug for the first time. He was very warm. I was kind of taken aback. Turns out he's Latin. I think he's from Uruguay originally, and so I thought, well, maybe it's because he's not Romanian. Maybe it's his Latin American roots that made him so
Right.
warm. But actually, what he told me was that he was so excited to meet me because I was an equity capital market investor and public sector investors, public market investors didn't come through regularly to meet with the IMF and to meet with other regulators. And its view is that public markets are the way to drive prosperity and growth. That through the public markets, not only, is there again the transparency that allows us to direct capital to companies that are productive, creating jobs, creating growth. I think that's kind of a well-known thesis that investment capital can reward the winners. But what he said that really struck me was that equity capital markets also provide a tool to enforce transparency across companies and across markets. By being publicly listed, we as investors essentially require companies to report their financial statements with regularity. And by reporting your financial statements, by reporting your cash flows, it shines a spotlight on how is cash used, where is cash going, what's the source, what's the use of the cash. And his view is that this is the way to stamp out bribery and corruption across emerging markets where this had become endemic. So I thought it was so fascinating. We talked before, my view of this all comes down to governance in the end.
Yeah.
Kind of an interesting epiphany again for me to realize that the capital markets can deliver this pathway for impact.
Yeah, no, it's a great point. And it reminds me of another thing that struck me from your book, which was that it also enables the more general population of these countries to invest and take part in their country's economic growth by, having being able to buy shares in companies.
Exactly. It's a
Yeah.
form of wealth distribution.
Yeah, exactly. And we sort of take that for granted in the US or in developed markets sometimes, although that, not everyone can participate or does participate in the markets. But we know the power that it can bring to those who are able. And it definitely democratizes that at a much greater level when those public markets are liquid and robust. So yeah, great points. Well, Asha, this has been fantastic. A couple just kind of wrap up questions. One is, given all this in your experience, and as we look towards the future in the context we're living now, what is your vision for the future of finance?
I'm currently chairing the CFA Society of Boston, and we hear from our membership loud and clear that the central area of focus right now is technology. And I think I've talked about technology in the context of emerging markets already today. I think we all see it in our day-to-day lives, how technology is completely disrupting everything we do. We thought it was disruptive when technology was introduced 15, 20 years ago, but now with AI at our fingertips, things are changing all over again. So when I think of the future of finance, It's, how does technology reshape currency, the rise of crypto, big data, machine learning. I also think of it in the context of the sustainability space, access to so much more data that we can use to make better assessments. I talk in the book about kind of a well-known example around GDP. This notion of GDP was defined back when we didn't have access to big data. It's kind of a rudimentary measure that picks up on just one aspect of how to measure a country's health or wellness.
Yeah.
But in this notion of big data and the space that we live today, we can do so much better to characterize overall health and wellness, not just of individuals, but of countries and companies as well.
That's a great point. I think there's been work around alternatives to GDP that better measure wellness or well-being or human flourishing, because as you say, GDP was never really designed to do that. And that's a great point. Yeah. Hopefully this technology and big tech can help us do nice. And then finally, it's been great to hear kind of your story about how you found your way into this work. What kind of advice would you give to young people today who are in college or just getting their careers going, who might be interested in finance and or sustainability to chart out a career here?
Yeah, I'd say do it. We need you. We need you more today than we did yesterday. We need you more and more every day. It's a space that right now is coming under a little bit of pressure. But
Yeah.
I have no doubt that this is a space that's here to stay. Young people today have, come up in an environment where they think this is mainstream. And there's so much more room to innovate. We're at the early stages of funded finance. We're at the early stages of impact investing, arguably,
Yeah.
impact at scale. There's a lot of room for young people today to come and help develop this industry. I think as they do, the importance of skill sets. It's important to coming into finance to not be scared of the numbers, to enjoy the financial aspects, and ideally you can apply that. I run a systematic investment firm, so it's my own bias, but I think if you can do it at scale, do it with large data sets, all the more so powerful. But mostly I'd say just be passionate, find your passion, find what makes you kind of stand out from others. Think of that as your exception, and that's what makes you exceptional. Go for it.
Fantastic. Well, I love it. I love the optimism there too. And I totally agree with it there's a lot of pushback and headlines and noise about anti-ESG and all that kind of thing. But just these facts are real. These dynamics are real from social and environmental pressures across the investment landscape. And so I agree. It's not going away, and might be called different things or might be different strategies on how we approach it. But I think it's a great point. We're going to need lots of people working on it and innovating. So awesome. Well, Asha, thank you again for taking the time. Always great to catch up, and hope to talk again soon.
Yeah, thank you. Such a pleasure. The time flew by.
Totally. Take care.
Bye-bye.
Thanks for tuning in for the Future of Finance podcast. We hope you found today's conversation insightful and inspiring. Don't forget to subscribe or follow us on your favorite podcast platform. And please take a moment to rate, review, or share the show. All of this really helps us to reach more people like you who care about creating a thriving and sustainable future. And it's a really easy way to have a big impact. So please do follow. A quick disclaimer, the content of this podcast is for informational purposes only and does not constitute investment advice. Investments and strategies discussed may not be suitable for all listeners. Please consult a financial, legal, tax, or accounting professional before making any investment decisions. References to managers and funds are for informational purposes only and should not be considered endorsements or investment solicitations. This podcast does not monitor fund performance or guarantee the accuracy of third-party materials or statements. This has been an episode of the Future of Finance podcast, exploring how finance can shape a vibrant and sustainable future. Thanks for listening, and we'll see you next time.